Wall Street opens wallets wide for Trump alternative Nikki Haley at fundraiser. A lot to go through in today's video here today, folks. I just bought $5,000 worth of a stock. Well, actually, it's a stock and some options in today, okay? And we're going to speak about why I bought this today. Why I made a $5,000 move today? Do I think the stock's about to make a big run? Like, why would I decide specifically today to make that? And we'll talk about that in today's video. We're also going to speak about the commodities market, some interesting things going on there. We're going to talk about the most underrated metric that if you want to know if the economy's in a good place or a bad place, this doesn't get talked about nearly enough, and I'll show you that metric here in this video, and you know if it goes below this level, you're actually in some trouble, and it's very, very important. We're going to talk about a video I've seen recently in regards to Elon Musk describing something in relation to Cybertruck that I was like, that's kind of big, that's a game changer, we need to talk about that. And then right off the front, we're going to talk about why Wall Street doesn't want Biden or Trump in this 2024 election, and I'll kind of show you why that's going on there and why they're going to back certain other individuals out there so everybody can kind of understand that, because obviously next year's political season. So appreciate y'all joining me as always. Thanks so much for being here. Thank you for being subscribed to the channel. A lot to go through in this one. Busy video covering a lot of subjects in this one, okay? So this was on the front page of CNBC here today, right? Wall Street opens wallets wide for Trump alternative Nikki Haley at a fundraiser. Now, so I guess she raised like $500,000 or over $500,000, they said, right? And like my first impression of that is that's not very much money. Like that's not a lot of money to raise, just to be honest. That's not going to get you a whole lot of ads, 500K. Like you need to be at big numbers. Like supposedly the Trump campaign raised $45.5 million in the third quarter. So if Nikki Haley wants to be a big player in this, which I think is going to be still hard for her because she is not a household name at all. People that are super into politics know Nikki Haley, but I'm telling you, like, she is not a household name compared to, like, obviously B-Man and T-Man. I think she's already fighting a very tough uphill battle, and she's going to need to raise crazy money to kind of get her name out there where enough people will even recognize, like, who is this lady? Why should I vote for her? And those sorts of things. No, if you want to know why is Wall Street looking for alternatives, right? Why does Wall Street not really want B-Man? Why does Wall Street really not want T-Man? Just to be honest, let me show you why Wall Street doesn't want either of those individuals, okay? Here's why. This is stock market performance by president, okay? Now, T-Man and B-Man were not seen as necessarily good presidents for the stock market, right? And I mean, if you look at Biden's performance, it has not been impressive. T-Man's performance wasn't very impressive either. And T-Man definitely made some decisions. He was seen as somewhat business friendly in some ways, but other ways not so much, right? The tariffs, the China trade war, all those sorts of things really hurt the stock market valuations, caused some problems, and then there was kind of like an overall worry about, oh, what's he tweeting and those sorts of things. So Wall Street doesn't really want either of those individuals. And, they really don't want B-Man again, because here's the deal. The only president that has had worse performance out of the last 7 presidents up until this point in time in regards to stock market performance is George W. Bush. And, George W. Bush, his stock market was a disaster. He came in 2000, what was that, 2001 and left in 2009. And I mean, just one of the worst presidents in history when it comes to stock market performance. Like, the fact that he was in 8 years and the stock market did that is, really bad. So if that's the only guy you're beating, yeah, Wall Street's not going to really want to see you again. And so that's something that's going on out there, and we'll see how it all shakes out. It should be very interesting next many months in terms of political climate and what happens there, okay? Now, I saw this here today. I thought this was important. Charter shares plunge after chief financial officer says company may lose broadband subscribers in the fourth quarter. Now, this is a huge deal because Charter has already been not in the best place when it comes to their cable business. Now, if they're seen as losing broadband business as well, this is really detrimental, right? This stock was down nearly 9 percentage points here today. This is, Charter Communications, this should be seen as like a safety stock. Like that's the way Charter should, in theory, be. It should be like a safety stock. It's kind of a well-established company, not much growth. But now, I mean, it's turning into a very volatile almost like a speculative stock. That's the way it's starting to turn into, right? 9% down today, 8.7%. It's lost 50% of its value roughly from where it was a couple years ago. It's all the way back to pricing that you saw the stock around 2017, now at this point in time. And so this Charter Communications they're in some trouble because they're losing their cable customers. Now, if they're also going to be losing internet customers as well, which the internet business is getting more and more competitive as the days tick on here, that puts them in a really bad situation because people are cutting cable. And then if you're losing internet subscribers as well, it's not a good situation. Now, there's something very interesting, okay? And this brings it into a stock that I personally own. And I wonder if Charter is going to try to make a move to buy out this particular company. And that company is Fubo, right? I hope it doesn't happen because I really want to see Fubo prosper over this next 5-10 years and then be a standalone company. But, I mean, Charter's got to make some moves here. They're going to have to buy out some other companies because you can't see declining business in your internet business and declining in your cable business, which the cable business is almost impossible to grow because no one wants cable. They're all switching to things like Fubo and YouTube TV. Like that's what everybody's switching from. They're leaving satellite, they're leaving cable, and they're signing up for Fubo and YouTube TV. And that's why those services continue to grow and grow and grow, right? And so Charter, we did see recently where Charter said Fubo is their preferred streaming partner, which was very interesting, right? That Charter really rolled out the red carpet for Fubo, and it almost makes you think, would Charter try to make an investment here? Would they try to slowly buy out the company? Would they try to buy it out in general? Or maybe they wouldn't do anything, right? But Charter needs to do some things because that's a massive company, and I'm telling you, like if they just keep losing subscribers, like no one's going to want to own the stock. If no one wants to own the stock and the stock performs very poorly, then what happens? Well, the executives end up being replaced. The CEO and the CFO end up getting replaced, right? The board of directors gets pressured from the shareholders, and the board of directors says, hey, buddy, you're out of here. And then the new guy's in, right? No one wants to lose their job. They're probably collecting big checks from Charter Communication. Plus, you're not getting your big options. You're not being able to exercise big option gains if your stock just keeps going down as an executive as well, right? So that's another factor. And so they got to make some moves there to kind of brighten up the business. And you look at somebody like a Fubo, right? I mean, here this company was, if you go back to Q3 2021, they had less than 1 million subscribers, right? This latest quarter, 2 years later, that nearly 1.9 million subscribers. Now at this point in time, paid subscribers, that is, right? And I wouldn't be surprised if this company's 3 million plus subscribers, paid subscribers deep, in 2 more years from now, let's say Q3 of 2025. I wouldn't be surprised at all. A company like Fubo now is benefiting massively from word of mouth, right? Because they're starting to reach bigger and bigger scale, so they don't need to just count on advertising. Now they can also count on other people telling other people, oh, I got Fubo, like that's what you should sign up for. Like, you know, ditch the cable, ditch the contracts. You get way better product for way cheaper than what you're paying at your cable or satellite company. So we'll see what happens there, but I wouldn't be surprised if there's a move made. WTI is now down about 17 percentage points in the past 3 months. WTI continues to just be in a tougher and tougher place. Now, if you look at gas prices, this is the AAA gas prices national average, okay? Where right now, national average is about $3.22 a gallon. Let me know in the comments section what city you live in or what state you live in. Actually, let me know what state you live in and what gas price are you paying right now. Okay, because I know, you know, there's a certain amount of people that watch my channel that probably own Teslas and electric vehicles, but I would say most of you guys probably own internal combustion engines. So I'm very curious, what's the latest gas price you paid per gallon? And what state do you live in? Because I'm really, really curious about that. But right now, the current average is $3.22. A year ago, we were at about $3.40 a gallon. So less on a year-over-year basis. Now keep in mind, it was the summer of 2022 when things were out of hand. That's when the national average went over $5 a gallon. National average, like just a crazy, crazy number, right? Diesel has dropped off a cliff, which is great news for the truckers. And I know there's probably some truckers that watch this channel. It's definitely, I've heard from a lot of you guys over years. Hopefully this is something that's benefiting you guys because I know the trucking business has not been the best for the past year to year and a half. I know it's been pretty darn brutal. A lot of small trucking outfits have gone under. It's been just a brutal time in the industry. So hopefully a little reprieve here is starting with potentially coming out of the goods recession and then also diesel coming down. So right now diesel's $4.18 a gallon versus over $5 at this point last year, right? So that's good news, and that bodes well obviously for inflation. And the most underrated thing not talked about in the stock market that should be talked about is the fact that the consumer is going to likely be in a lot better position in 2024 than they've been in 2023 or 2022, right? Even though If you think about just a consumer, I mean, just slice and dice by inflation for several years, in terms of, I would still call it real wages, we kind of been flatlining here for a little bit, at least not going backwards. And I think we're going to see a massive uptick in real wages because the fact is the jobs market's still tight. Companies got to give their employees raises, and I can tell you, like, people's living expenses is not going to go up at the rate that their wages are going up in 2024. In 2023, it was pretty much opposite. 2022, it was opposite. 2021 was debatable. It was probably opposite, just to be honest. Real wages haven't been good for years. We're finally going to have a good year of real wages, and I don't think enough economists and folks are factoring in what that's going to mean for the economy, what that's going to mean for corporate earnings, what that's going to mean for consumer confidence index, what that's going to mean for small business confidence index. I think this is the most overlooked thing in the entire financial system right now. And I'm like, I think real wages are going to go up the most we've seen in potentially decades, to be honest, in 2024. It's going to be pretty extraordinary. Now, this is maybe the most underrated economic-related thing, I think, in the markets overall. This is total non-farm job openings, okay? So, right now, sitting at about 8.7 million job openings or so, 8 million something, let's just call it that, okay? And of course, these numbers move around, and you can say, well, what about it? What is it actually today in December, what is it today? December 5th of 2023, right? All these things lag, but nonetheless, we have 8 million something job openings out there. Now, that's a huge surplus still. And so the reason this gives, everybody was predicting recession 2023, all these job losses, all this type of stuff, horrible economy. It hasn't been that way at all. And the reason being is so many job openings. If you lose your job, it's not hard to go find another job. It might be harder now than it was a year ago or 2 years ago, but the fact is you can still go get a job easily right now. Now, if we go under this number right here, 6 million job openings, then you've got to start saying, okay, maybe recession is really headed this way, maybe job loss are really headed this way. Once you get under 5 million, then you really start to, worry in a significant way. But when we're still up at these sorts of numbers, folks, it's hard to get the economy to crash, to have the big boom when you have that many job openings still at this point in time, right? And sure, is it down a lot from where it was, a year and a half ago, 2 years ago? Absolutely. But it's still ridiculously high based upon any time period in the last 20, 30, 40, 50 years. So in order to really see damage in the economy, get this number under 6 million job openings, and specifically if you get it under 5 million, then you're talking. 6 million is where you need to start to really question. 5 million is where you need to start to worry big time, okay? So, something to keep in mind. Keep track of that in the future, folks. It'll be something very important, okay? Now, speaking about things that are very important, this right here, this is a GSG, commodity index. I've shown it to you guys a few times in videos in the past. It's up 1.4% in the past year, which is huge, because that's way below where CPI has been at for the last year. If you think about CPI in the past year, we've really been 3 to 5%, let's call it, 3 to 5% CPI. And yet commodities are only up about 1% in the past year. So this bodes great for inflationary numbers in 2024 overall. It's going to be a very good situation. Now, on the flip side, if commodities go beast in 2024 for whatever reason, let's say that happens hypothetically, that's not going to hurt 2024 much, but what it would hurt is 2025. And that would lead to inflation worries, Fed having a raise in 2025, those sorts of things. So it is something we got to keep track of. But for now, this is the best news for 2024 because commodities are a lagging, this is called thing in the economy in terms of inflation. And so the fact that commodities are doing nothing, very good, very good, very good for 2024 overall, okay? Speaking about kind of what's going on here, Toll Brothers reported after the bell here today, and they're definitely seeing deflation in their business across the board. Like Toll Brothers seeing real deflation, and this is going on for a lot of these home builders now at this point in time. Home sales are down year over year. Land sales are down year over year. Total revenue is down almost $700 million year over year. Home sales, as far as their cost, is roughly in line. Their net income is shrinking quite dramatically, $445 million of net income, which is still a very healthy number for Toll Brothers. That's actually, a phenomenal number for them. But when you did $640 million in net income the same quarter last year, it's, slightly disappointing here. I mean, Toll Brothers used to be a business you would expect $100 to $200 million in net income. 445 is still a very high number. So keep this in mind. Toll Brothers' business actually is still very extraordinarily in almost the best place ever, other than last year. So for a company like Toll Brothers, I mean, it's hard to argue that maybe only it gets worse from here, just to be honest, okay? Now, we're also seeing deflation in their business model. I thought this was very important here, okay? So the company delivered homes fell to 2,755 from 3,765 a year earlier, right? But the average selling price of contracts fell 11%. Now, think about this for a moment. Toll Brothers in the ultimate position of power versus existing inventory, and really the biggest position of power they've ever been in, just to be honest, because existing inventory is so low right now. So if anything, Toll Brothers really has pricing power right now, given that they say, okay, we can build you a nice new modern home, or you can go buy something outdated for probably the same price in the existing market, right? And so they're in really a position of power. So to see average selling prices down 11% definitely shows you the deflation that's really going on. This is not disinflation. This is straight up deflation going on for these home builders now at this point in time. Disinflation is like the rate of increase slowing down. Deflation is literally numbers going negative, and for Toll Brothers, the numbers are starting to go negative, and negative quite considerably, right? And so we'll see how this shakes out. Now, for Toll Brothers, you know, this upcoming quarter might be okay for them, and the reason being in terms of everybody's looking at their sales, and the reason being is the stock market's been tremendous, obviously, this year, and so that makes a lot of their customer base feel a little better because they're on the high end. We'll hear what RH has to say on Thursday. I'll be reacting to RH's conference call live on Thursday on the Twitch live stream, and we'll see what RH has to say in regards to the housing market there. But that's some food for thought there. Now, take two. I thought this stock was very important today because this is the ultimate buy the rumor, sell news move here today, right? Because this stock was actually down here today. And why is it such a big deal? Well, the reason being is this company owns a bunch of different video game brands, and one of these brands is named Rockstar Games. Now, Rockstar Games yesterday just had the most viewed YouTube video in the history of YouTube in its first day. They finally showed off, it was the big day yesterday, they finally showed off their trailer for the next Grand Theft Auto game. Most viewed video ever in the first 24 hours. It was around 90 million views when it hit 24 hours in. Absolutely incredible, right? And you might have thought, gosh, like the level of interest in this, and I mean the amount of people that were doing reactions to the trailer and we're getting millions and millions of views all over social media, it's insane. Like, you know, we've never seen anything like it, right? We've never seen anything like this for any video game ever in history. And so it's a huge moment for the company, and you might have thought, oh, their stock's going to have to beast here today. Well, no. They just launched the biggest, most viewed video game trailer, but a lot of it was already probably priced in, right? And so that goes back to the whole buy the rumor, sell the news situation in regards to that one, right? And it just took away the Cybertruck was kind of the viral thing of last week, right? And it just kind of like zapped the viralness away from Cybertruck there. No, there was a huge, I missed this part of this Joe Rogan interview with Elon Musk recently. I thought it was really important because Joe Rogan's asking him essentially, like, why are you, like when it comes to range with Cybertruck, like why not have a lot more range, right? And, have 500 miles range, 600 miles range, things like that. And Elon Musk brings up a great point. And he basically says, well, we could do that. But then you're going to be hauling around way more batteries. He says, that's like saying, like, why not just have a 2,000-mile gas tank? And you only have to fill up once a month or once every few months or something like that. And it's like, sure, but now you got to drive your car around with a 2,000-gallon gas tank, right? Which is absolutely insane. And now you're going to get way worse gas mileage because you're hauling around this massive gas tank everywhere, right? Which is true for electric vehicles as well. You add massive battery packs, so now you have 500-mile range, 600-mile range. You're only using that range a few times a year. Right? When you have to go out of state or when you go, somewhere that's really far. Most of the time, you're never going to use that range. Most of the time, I never use the full range of my Teslas, right? The only time I ever use a full range is when I'm going to LA or going to, to Phoenix, somewhere like that from Vegas. That's the only time. Other than that, I never use the full range of my vehicles. Like, everywhere we drive in Vegas is like within 30 or 40 miles, probably within 20 miles, to be honest, there and back, boom. And then you're charged up. You never use a full range unless you're going through states. So I think it's a great point. And he's like, well, then you have worse handling, then you have worse this, then you have, you get less miles. And I was like, that's freaking true, man. That's true. I thought it was a great point. Great point by Elon Musk there. Okay. Now, A few days ago, I put out my 5 stocks I'm buying for December video, and one of those stocks I did buy here today, okay? And why did I buy it specifically today? Why not another day? Why $5,000 today? What did I do there? And all those sorts of things, okay? The stock is, you might know this one, PayPal. $5,000 today specific, right? I bought shares and options. I'll show you both here in just a moment. And we'll talk about why today specific, because there's actually 3 reasons why I made this move today and not like tomorrow or the next week or something like that, okay? So first thing is I bought 77 shares here. This was 4,400 and some change there in terms of the straight up shares I bought. And then I also decided to put a small amount, so about 10% of the money into options. So 90% went into shares and about 10% roughly went into options. And what I would decide to go with is options that expire January of 2026. Now, if I do anything in the options market, it's got to be small, right? Because I don't really like the feeling of being under a time constraint. So this is like, you know, it's 10% of the allocation, right, of today's allocation. So I went ahead and bought $95 strike prices. I paid $5 for those. And so, you know, these babies expire January of 2026, January 16th, 2026 to be exact. And here's kind of how things look here, right? If PayPal stock in January 2026 is, let's say, $100 a share, right? Which I would kind of be disappointed if PayPal stock is only $100 in January 2026. I would actually consider it a borderline failed investment if PayPal shares are only $100 in January 2026. I would be disappointed. But if it's $100, you know, I'll get my $500 back. If it's $150 a share come January 2026, which I think is pretty realistic, then that'll be worth $5,000. If the stock's $200 a share, my $500 will then be worth about $10,000. And if the stock's $300 a share, which would be back to all-time highs that it hit back in kind of 2020, 2021, you know, $20,000. The $500 would then be worth, right? But here's the thing. I'm probably not holding it all the way to January 2026. If this stock goes on a beast run next year, and let's say this time next year the stock's sitting at $110, $130 or something like that, at that point in time, I would likely cash out. Because at that time, I mean, let's say the stock's 120 at this time next year. It has a beast run in 2024. It's a $120 stock. It basically doubles up next year, okay? So my options, my $5 strike options there would be, or $5 in premium I paid there, those would probably be, I mean, I would think those would probably be worth 70, 75, something like that. I'd probably just get out of it at that point in time and say, screw it. Like, you know, it's and just flip that into shares and play it safe at that point in time. So that's kind of my thought process. If the stock goes beast over the next year, get out of those, go ahead and run that money into shares. And, you know, that can be that at that point in time. Or it can run into a different stock if I think there's a better opportunity at that particular time, right? Now, next question is why today? And there's 3 core reasons why I went ahead and made that move here today and not like tomorrow or next week or next month or something like that, right? Which, by the way, I'm going to be buying PayPal stock every week for the next several weeks. So that's something to keep in mind, okay? First reason is it was a big downward day. I mean, PayPal was down as much as 4% here today. So I thought, okay, you know, nice big downward day. Let's go ahead and make a move on that. That was reason number 1. Reason number 2, a little more complicated. We're running down on time for tax loss harvesting. And so I think there's a little bit of tax loss harvesting that could probably come still in PayPal in the month of December, but I think we're starting to run out of those sorts of folks. So, like I said, I think there's a little bit more still to come, but I don't think there's a lot more to come in regards to tax loss harvesting. Tax loss harvesting is the people that, let's say, bought PayPal stock years ago, a year ago, 2 years ago, 3 years ago, 4 years ago, whatever. They're down on their shares, and they're saying, like, you know, I want to, you know, take that loss, write it off against some gains they got in the market. There's a lot of stocks that have done tremendous this year. Say you own Meta, you got a bunch of shares in Meta, you sold off some of your Meta shares, and you don't want to pay tax on that, so you write off your PayPal stock, right? But you've got to take the loss on that, so you've got to actually sell your shares, right? And then you can't buy it back until at some point in the first quarter of 2024, then, right? So I think there's a little bit left, but I don't think there's that much. And so if I thought there was a ton of tax loss harvesting still to come in PayPal, I would not have made that move today. I think there's probably a minimal amount left in regards to that, okay? The third reason is this news that just broke out here today, okay? So internal memos got leaked at PayPal. And basically, new PayPal CEO fast-tracks upgrades to beat back competition. Now, first thing up here is, from what I read, you know, in this memo that was leaked out there, I don't think this is a defensive move. I think this is an offensive move. You know, I saw the media was kind of portraying this as like a defensive move. I don't think Alex Chriss even thinks defensive. I think he thinks offensive, just to be honest. I think they're coming to eat people's lunch, not trying to protect their lunch. There's a difference. PayPal is coming to eat other people's lunch. There's a difference, okay? New PayPal CEO Alex Chriss is fast-tracking an effort to bolster the company's defenses, this is the way the media is pitching it, against Stripe and Apple Pay, highlighting how the payments giant has fallen behind newer, sleeker competition. No, they have not. They just haven't. It's just not factual at all. Like, what are they talking about here, man? It's just ridiculous. It's just ridiculous. But anyways, okay, that's the way the media portrays it. Teams across the payments giant have been racing to add a slew of new features to make its digital wallet and online payment more attractive for shoppers and merchants, two employees said. Part of a project codenamed Quantum Leap that launched weeks after Chriss joined at the end of September. They're working on a tight timeline with the goal of making meaningful progress by January and rolling out the changes widely, likely around March is what they're talking about here, okay? And so, once again, the media is portraying this as a defensive move. I don't think so. I think Alex Chriss is playing offense here, and I think he wants to get out in front of everybody, and I think he wants to just, you know, and the thing is here, okay, and the reason I would be worried if I was anybody that had to try to compete against PayPal, Venmo, or Braintree, Alex Chriss isn't gonna lay off the gas. Whatever you see them come out with in March, that's just a start. He's going to keep going, and he's going to move. I think he's probably going to move way faster than any of their competitors. Apple Pay is just one of a million things inside Apple Corporation, right? What else is their competitor? They want to say Stripe on the Braintree side. Like, you know, Stripe's a formidable competitor, but they're starting to get bureaucratic because they've reached such kind of dominant market share there now at this point in time. Like, who else is their competition? Cash App. Cash App's got its group of individuals that use that service, but it's not the, So what I'm looking at, like, is Alex Chriss is going to keep the pedal to the metal, and whatever they come out with in March is just a start. And then they're going to keep moving. Like, it's not like he's going to, whatever they're creating right now and they launch in March, like, it's not like he's like, okay, we're good now. No. He's going to keep going and keep going and keep going. I think he's going to probably put the company in a position where they're going to move faster than anybody else is moving in the industry, which is no one's expecting that from PayPal. No one's expecting that. You see the way the media is portraying all this. Defense, defense, defense. Dude, I don't think Alex Chriss thinks defense. He's thinking offense 100%. And so, maybe the last CEO, Dan Schulman, he might have been a little bit more of a defensive thinker. His history come back from Amex. He might think a little more defensive. Alex Chriss thinking offensive. And the best defense in business is a great offense. So that's a little food for thought there, right? And so with PayPal, right, continue to buy the stock up to, this is in the public count now at this point in time. I put $126,000 in the stock so far. I'm up to 1,930 shares. I'm going to continue to buy this baby. And to show you kind of where my conviction's at, if you look at past positions I built up in the public count, right, versus a PayPal, well, Meta, probably my highest conviction stock ever in the public count, I put $222,000 into that stock, right? Those shares are now worth $579,000. But, do I have as much conviction in PayPal versus Meta? No, not quite to that level. Meta was a different level. That's pretty much the highest level ever, right? Amazon, huge conviction in that one. $113,000 I put into Amazon, so technically PayPal I have even a higher conviction than actually I did Amazon, Amazing's Palantir, $49,000 I risked in that one. Those shares are now worth $101,000. And so Palantir, definitely more confident in PayPal than Palantir, especially because when I was buying a lot of these Palantir shares, they weren't actually profitable at that time. And so it was taking a pretty significant risk there, right? Tesla, $39,000, but I don't think that's really fair. And the reason being is the account was so much smaller back when I bought PayPal. Back when I bought Tesla. When I bought Tesla, this was like, I think these shares were acquired in 2019. The public count was a baby compared to what the public count is nowadays. It's a beast nowadays. Back then it was a little baby, so $39,000 was a good amount of money for the stock overall back then. ELF, $7,279. Those shares are now worth $125,000, but ELF's kind of a freak situation. Let's just call it what it is. And so when I look at the public count overall, I'm going to continue to buy, and I will be likely buying shares in the public count on Friday. Don't be surprised. I make moves every single week in the public account. If you want to see the moves I'm making every single week in that portfolio, you can join my private stock group. That's pinned comment down there to apply to join us in there. You get access to all my courses, access to see the moves I'm making in that portfolio every single week. Every single week I'm making moves in the public account every single week. Get access to join our Discord chat, all that good stuff, folks. Appreciate you joining me as always. Thanks so much for being here. Much love and have a great day.